Part just so we don't record it, but we will resume recording.
Good morning, everybody. Thank you for joining us for today's Small Business Boot Camp. I'm Robert Theobald, your host, the Small Business Ombudsman and Vice President of Small Business Services at the Arizona Commerce Authority. And we're glad to be with you today for this great session that we have planned. Before we jump into all that, we'd love to have everybody post up in the chat where you are tuning in from. We like to see where throughout the state we have our participants coming in from. And then also sometimes we have people from out of state or out of country. So we like to see that. All right, surprise, Phoenix, East Mesa, Tucson, Sierra Vista, Scottsdale, Laveen, Avondale, Glendale, Scottsdale, Superior. All right, I'll be there tomorrow. Williams, Litchfield Park, Yuma, Chandler, Phoenix, Tempe. All right, Scottsdale, more Chandler, Window Rock. All right, Buckeye, South Phoenix. Again, if you're just tuning in, post in the chat where you're tuning in from. Got Tolleson, Tucson. All right, we've got a big area covered. Our presenters today are from Flagstaff and Page, and so I've got my background on representing Page with Horseshoe Bend. But as we like to do as we start to do the boot camps, we like to recognize our presenters and all of our community partners and thank them for their time, their effort, and their expertise. We could not do these webinars without them and their commitment to giving back to the community. So thank you very much to them. Also, those that are new, the Small Business Boot Camp is designed to help small businesses prepare, plan, and grow. It is not only our webinars that we do every Tuesday morning, 9 a.m., this one that you're on, but we also do lunch and learns, special sessions, and in-person workshops as part of this program. One of the great things about doing these as a webinar is we can record it and create our content library. And the content library is available to everyone at no cost. There's well over 300 recorded webinars and workshops that you can find on there. And you can access the recordings and the slide decks. We like to get the slide decks from the presenters so you can download those. So for example, in today's session, if you're interested in the slide deck, you can download it tomorrow. It'll be in the content library and you can access it and download the slide deck for review. So it's a great tool. The ACA also has a number of other programs to help support small businesses. We have our Career Readiness Credential, Innovation Challenge, Arizona MEP, Arizona State Trade Expansion Program, otherwise known as AZ STEP, Arizona at Work, and then Small Business Services. You can find more details on all those at our website, azcommerce.com/programs. On top of that, one of the programs I always like to talk about because it is for this audience is the Small Business Checklist. It is designed for entrepreneurs that are looking to start a business or looking to expand their business to identify the commonly requested licensing, registration, and compliance needs at the local, state, and federal levels, as well as provide entrepreneurs with other business resources and tools that can help them as you're starting your business, or again, as I mentioned, as you're growing your business. You can scan that QR code on the side there and access these small business checklist. So one of the great things about our boot camp and our community partners is we have many of them. And so today's session is also part of the Seed Spot Startup Spring Training. So I'm going to let Tristan Gandolfi from Seed Spot take over for a little bit and share some information about this program and for the participants, how they can access and get credit for being here.
Of course. I want to thank you, Robert, and the ACA for allowing us to partner. Startup Spring Training started 3 years ago with a goal of kind of uniting all these amazing organizations in the Valley and supporting diverse entrepreneurs. And so as part of that, we have 3 weeks, and it's themed very similar to spring training at baseball, where our entrepreneurs have an opportunity to round the bases by attending classes, connecting with partners, getting one-on-one mentorship, and then ultimately the prize or home base is a $500 micro grant. And so we are presently in week 2 of our 3-week series, which means there's plenty of time for those of you who are logging on today, based in Arizona, and interested in this opportunity. So I'm going to put into the chat a link that allows you go right to that link to register for Startup Spring Training. You will get credit for today, so you're already on first base before you even knew it. And you have the opportunity then to sign up for a lot of the ongoing classes and mentorship opportunities.
So I wasn't clicking through the slides fast enough, so there's some information about it.
You got it. Yep. So as mentioned, we're in week 2 of a 3-week series. We're obviously just at the beginning of week 2. So I think we've got about 20 sessions left over the next 2 weeks. Plenty of sessions. And then if you want to, you can also register right now by taking out your phone and scanning this QR code. Our secret word of the day is umpire. Again, baseball themed, very punny, if you will. And that'll check you into our system, but also know that the ACA team is kind of the link. I'll put that link back in. I just signed you up for your mentor one-on-one. There you are. All right, cool. Yep. So this link right here takes you to the website to register for all of the classes. But if you're looking for the link to check yourself in, you're going to go ahead and scan using a QR code. So taking out your phone, accessing the camera, focusing in on that black square, you'll have a pop-up that comes into your registration, and lickety split, you add the code word, your first name, your last name, and we're good to go. Great. Robert,
Excellent.
yeah, and so as mentioned, the scan code here is for the full schedule. I've already put that in the chat, so don't worry about that.
All right.
If you want to hit 2 sessions today, you can do that. Joining us later this afternoon at 12 p.m. All right, I can put a Slack for check-in in the chat as well. Just stand by. But this is not about Startup Spring Training. This is about ACA and some amazing content. So let me pass it back to you, Robert, so we can with our content.
Thank you, Kristen. Yeah, so some of our upcoming sessions. Now, next week's session on project management is also part of the Startup Spring Training program. It's their 3rd week. And so you can participate in that as well. And then in April 2nd, we have ChatGPT for Business, an introduction to the AI revolution. This is a really cool session. I've been part of it before with the presenter, and we actually dive into show some real world examples of how you can use it. So definitely want to attend that, and tell all your friends that are interested in ChatGPT to check it out if they have a business and how they can use it for their business. And then we're going to jump in and talk about Canva and how you can use Canva to elevate your business. So we've got great sessions lined up for the next few weeks, and we got great sessions lined up all the way into this summer. We also have another Lunch and Learn coming up for Small Business Guide to Harnessing Untapped Talent Resources. We hear that a lot of small business are struggling to find employees, and this one is going to be by ASBA, the Arizona Small Business Association, and they're going to talk about an untapped resource for finding some of those employees for your business. So join us for that on Friday, April 12th at noon. So with that, we're going to jump into today's session. We've got today great speakers. We have Cindy Scott. She's the director of the Coconino Community College Small Business Development Center, and Savannah Searles is the founder of Account For It All. And so they're going to be our presenters today. So with that, I'm going to stop sharing my screen, turn it over to them. And in this session, if you have questions for our presenters, please post them in the Q&A at the bottom of your screen. That way it helps us track them better and make sure we can get to the questions that you have. So with that, Cindy, it is all yours.
Thank you so much, Robert and Faith and the ACA for having us. And thank you all for joining us today for this webinar on the importance of financial management. My name is Cindy Scott, as Robert said, and I'm the Center Director for the Coconino Small Business Development Center. And I want to just take a little bit of time to talk to you a little bit about what the Small Business Development Center is. Some of you may already be familiar with who we are and what we do. But for those of you who are not, we are a small business resource. It's a no-cost resource for your business, and we can help you find the tools that you need to start your business, keep your business running smoothly, prepare for growth, and plan for the future. Every business is unique, so these services that we offer are catered to the needs of the business we are helping. And we also offer no cost to low cost workshops. So if you're interested in any of the services or workshops that we have, you can reach out to us, and I'll provide the contact information at the end of the presentation. I also wanted to give it over to Savannah so she can introduce herself.
Hi everyone, my name is Savannah and I own the firm Account for It All in Flagstaff, Arizona. We do service businesses all around Arizona, so whether that's Sedona, Kingman, Phoenix. I know a lot of you are from the Valley, but I'm a QuickBooks Pro advisor, and so we help businesses understand their financial statements so that they can make informed decisions, and help them just with bookkeeping and make sure that their financials are accurate. And so I really just love making businesses successful, because not only if the business is successful, you have employees, that helps their life. It's just a domino effect. So really enjoy. I do a lot of QuickBooks training. So yeah, if you need help, we're here for that. And so today, it's a pleasure to be here, and I'm just really excited to share some information with you guys. All right, so getting started, the learning objectives for today will be to explain the importance of financial management for business owners, explain how proper bookkeeping, financial statements, budgets, and cash flow forecasts can help manage their finances effectively, and then identify how financial management challenges, tips, and tools commonly are available to small businesses. So as a small business owner, you wear a lot of hats, and the financial piece is a lot of times something that is inherited, but you didn't really know that you're going to have to do it. And so we're here to just help you through those challenges today. And hopefully you walk away feeling a little bit more confident and empowered to own the financial management of your business. Okay, so financial management, it's a term we use very often. And so some may ask, what does that mean? And so really it's just a term that we use to explain that you need clean and thorough bookkeeping, accurate projections, financial statements. And with that, you'll be able to answer the questions: is your business profitable? Is it going to grow, and how much? Can you launch that new product? Can you afford to launch the new product? And if you do, will the bank give you a loan, and will you be able to pay it back? And with the loan payments, is it going to strain the business? And so it just gives you really informed decision-making skills. All right, so something that we're gonna talk about a lot today are financial statements. And so there are pieces of each financial statements that we kind of need to get into the nitty-gritty of the definitions in order for you to understand what those mean. And so the first thing is identifying assets of the business. Assets are what the business owns. They represent something of value. They're tangible, and they can be intangible. But whenever I think about assets, I try and explain to my clients, it's what's liquid, meaning what is cash. So most of you have a checking account, which is the most liquid form of an asset because it's already cash. But think about other things such as vehicles or something that has a useful life. You could sell it for money if you need to. So every business has assets. Some businesses will have a lot of assets. So for example, a construction company is going to have a ton of equipment. They're going to have a lot of vehicles and tools. And then someone like myself might have different assets. I have a lot of computers and software and things like that. So everyone's assets are going to be different, but just think about it in terms of you could sell it for money and there's a value to it and it has a useful life. There's two kind of types of assets. There's tangible, which you can physically hold it, and then there's intangible assets. So there is, so for example, the branding, trademarks, and whenever you sell a business, a lot of time you'll have goodwill. And so those are valuable to if somebody was going to purchase your business, but they're not really things you can hold. So those are all things that represent assets. And then when we move to liabilities, we talk about what you owe. And so a lot of times, people will buy an asset, but they won't use cash for it. And so then they use credit, which is a liability. And so when you think about liabilities, just simply it's what you owe to other organizations or people. And so liabilities can be short-term or they can be long-term. Think about your credit card. You have to pay that every 30 days. There's a balance owed. But then if you have a loan, you have a term on it of probably 10 years, 15 years at a standard interest rate. There's also liabilities such as sales tax. So monthly, you might collect that money from your customers, and then you're liable to pay that to the state or whatever government agency that you need to remit that to. Same with payroll tax. You're withholding that money from your employees' checks, and you're required to remit that on their behalf. And so these two accounts kind of go hand in hand on the balance sheet, which we'll get into later. And then next, we're going to move on to revenue and expenses. And so this is where a lot of people get caught up of, well, what is income for my business? And so income and revenue are interchangeable, or you can use the same, it's the same term for each, but essentially it's what you earn in your business. So that might be selling products, it might be offering services. Every business is going to have a little bit different revenue structure, and there might be companies that have multiple revenue structures. So for example, a construction company might have a masonry department, they might have an excavating department. There's different ways that your company can make money, but at the end of the day, that's all revenue. And so that's what we start with. And then expenses are unique to every business as well, just like the revenue. However, it's a common question I get almost every day. Well, is this a legitimate business expense? And so an easy way to answer that is, did it go into the production of making the income? If you spent money to make money, then yes. I can't deduct dog treats, but the dog groomer down the street can. And just like if I was to buy a excavator, I would have no use for it. So I wouldn't be able to write that off. But a lot of common ones that every business has are rent, utilities, cell phone. And so just think about what it is that you need in order to produce that income. And then that will answer the question, what is the expense? I really think that it's important to be aware of the categories of your expenses and be very organized with them. At the end of the day, if you're capturing all of your legitimate business expenses, that is less tax that you'll have to pay, and you'll also be able to monitor those over time. And so with those four kind of standard definitions, we're going to move on to how to build financial statements and what is a financial statement, what do they mean? And so financial statements, they take the assets, the liabilities, the revenue, the expenses, and the equity, and those are all part of what we call chart of accounts. So regardless of what bookkeeping system you're using, you're going to have a chart of accounts. Like a lot of people use QuickBooks, but there's other people that use Xero, Wave, whatever it is. And so the chart of accounts is the backbone of whatever accounting system you're using. And then based on the buckets that you put the income and the expenses in, those will start to build your financial statements. Financial statements are used, every business has financial statements, whether they're accurate or not, that's the question. And so if you put bad data into a system, you're going to get that data out of the system. So we really strive to have people have accurate bookkeeping so that these reports are meaningful. So typically it's the owners and the managers looking at these reports. might be on a weekly basis, might be on a monthly basis, but they're looking at it to monitor the business and whether it's profitable, if it's healthy. But there's also a lot of other people that will want to look at your financial statement. So for example, you might have suppliers that are willing to extend terms on your purchases, but they need to see your financials to make sure that you can pay. There's also banks to see if you qualify for a loan. And then investors, if you're looking for maybe to somebody to come in and invest in your company so that you can launch that next big thing, they're going to want to make sure that you're running it properly. And if you have incomplete financial statements or inaccurate financial statements and you can't answer for why a number's showing up where it is, they're not going to feel very confident about investing in your business. There's also even just things like if you're doing profit sharing for your employees. So you can see there's many, many uses for financial statements. And so we really need them to be accurate and for you to understand what they mean. So that's what we're going to go into next is the different types of financial statements, starting with the income statement. And so the income statement, I would say this is probably the most talked about financial statement that we use and that a lot of people look at. It's sometimes called a profit and loss statement, or a lot of people call it a P&L. It's the same exact thing. And what it is it takes the amount of money that your business has made and deducts the expenses or the amount of money that you've spent to make that money. And it leaves you with a profit. You can use the financial statement to, one, see if your costs are too high for the income that you're bringing in. You can use it for tax planning. So a common misconception is, oh, well, I brought in $100,000 in revenue this year. I'm going to be taxed on $100,000. And that's not what the case is. You're taxed on whatever that net income is, or otherwise known as profit. The income statement is really valuable to compare year over year, so you can see the growth in your revenue. So say maybe you launched a new product in 2022, and now here you are in 2024 trying to see if it's okay to launch another one or how well it did. It's a really valuable report. Now, something with the income statement that is important to remember, it is for a specific period of time. And so you can divide that into, you can look at your income and expenses on a monthly basis. You can look at them on a weekly basis. You can look at them on a daily basis based on how often you're entering data into your system. But it's really good to show trends and just increase in costs, and you can forecast with it, which Cindy will get into later. But a really, really important thing to look at. A common misconception is that if you receive money into your checking account, that's income. And so making sure that, you're categorizing things properly so that the net sales are showing what they truly are is also important. So this is, like I said, the most common report that you'll look at, but this report isn't super meaningful unless you're looking at another report in tandem with it called the balance sheet. So, like I said, a lot of people look at their P&L all the time and they never look at their balance sheet. Well, I'm a big proponent of they flow into one another. So, for example, whenever you purchase something, you might have the expense on the P&L, but how did you pay for that? You paid for it with your asset of cash. And so they do talk to each other, and it's ever flowing between the reports. And so very important to look at. What the balance sheet is it shows your assets against your liabilities and equity. And so there's an accounting equation that if you're an accountant, you know it like the back of your hand. And what it means is The assets equals the liabilities plus the owner or the stockholder equity. And you can see on this example of the report, you'll see the total assets are showing 200,000, and then the liabilities and equity are showing 200,000. So really what this is showing is the health of the business. So for example, if you go out and you bought a bunch of equipment, but you financed it all, it's not going to show that the business is super healthy because you don't technically own that equipment yet because you have an offsetting liability against it. But it also lists, so if somebody was to gonna go buy your business, they would look at what assets do you have? Do you have a lot of cash in the bank? Accounts receivable, so like how much money are you about to bring in to the company? Anything that's you're going to get paid for, like a short-term investment. And then, like we had talked about, equipment, anything of value that you own and you could sell. Now, the liabilities, again, those are things that you're liable to pay, and you'll have current, long-term. So the notes payable there are long-term. And then stockholder equity is kind of a fancy word that we use in accounting for personal or the owner's pocket. So for example, if you put money into the business, that's not income, it's stockholder equity or owner contribution. It's some sort of equity that you took out of your own pocket and put into the business. And so just making sure that you're putting things in the right category. And so the balance sheet can show a lot. If you're going to get a loan, they will look at this and see if you have the ability to pay back that note or if you're overextended. And so, for example, whenever you post to a loan, there's two pieces of that. You're paying down debt, but you're also have the interest expense. And so making sure that you're posting that properly is important. And Cindy will get more into the bookkeeping side of it later. But then there's one more statement that is so crucial to identifying the health of your business. And if you can succeed as a successful business. And so this is called the cash flow statement. It shows the movement of money into and out of a business. So if you have a positive cash flow, that means that the cash is moving into your business at a greater rate than it's moving out. If you have a negative cash flow, it means that the money is moving out of your business quicker than it can come in. Now, when you have this happen, it can cause a lot of problems. You can't pay your employees. You can't pay for products. You can't pay for cost of goods. And so I have a lot of clients that they show a little bit of profit, but their debt is so big that it's taking away all of their cash. And so you cannot have a successful business without cash flow. And learning how to build these reports will help you identify if you're going to have cash in 6 months. Your business might be seasonal. And so knowing that if you're going to be able to afford those lean periods is really important. So starting at the top of this statement, we start with the sources of cash that come into the business. This can be various items. You can have the sales, so the income of what you're selling or products you're or services you're offering. People paying their AR, interest income. You can also get a loan, so that could be from a bank, from a private party, and then if you contributed from your own pocket. So all of that adds up to money coming into your business in whatever form it may be. And then we add that to the beginning balance. Then there's operating uses of cash. So these are things that you need in order to keep the lights on in your business going. So that's going to be utilities, rent, payroll, cost of goods sold, marketing, professional fees, whatever it is. These are mostly the items kind of on your P&L under the expense category. But then there's going to be non-operating uses of cash, which are debt servicing, equipment purchases, if you want to take out money for yourself, as an owner draw, whatever that might be, but it's money coming out of the business, whether it's a business deduction or not, it's leaving the bank account. And then you're left with a balance, and that balance will be positive or negative. We always shoot for it to be positive, but there might be periods of time where you did buy a piece of equipment, and for that month, your cash flow is negative, and that's okay. But you just want to make sure that it is still going positive in the right direction. And so I can't stress how valuable this statement is. You can look at your P&L, you can look at your balance sheet, but like I said, without knowing your cash status and if it's healthy and moving in the right direction, it's going to be really, really hard to be successful. And so with that, I'm going to turn it over to Cindy to go over how to use these tools to make better informed business decisions.
Thanks, Savannah. All right, so let's talk about bookkeeping. Savannah set this up really well. Bookkeeping is the backbone of your business. It is the organized process of tracking income and expense transactions, which she's already explained. It is the basis for all financial management decisions, and without good bookkeeping, your financial statements will not reflect accurate information. And it makes it difficult for you to make those good decisions for your business. You may have heard the term GIGO or GIGO before. It stands for garbage in, garbage out. Again, another accounting term that we use often. And if the chart of accounts is not configured correctly, or the information is just not entered into the system correctly, then it's not going to produce those accurate financial reports that we need. So bookkeeping is a critical component of financial management. It is the key. So budgeting, it ensures that you only spend what you can afford. It helps you see what is limiting you and what needs to be fixed. And it can help you plan for emergencies. And it can also help you plan for retirement, which is always a goal, right? Think about your personal finances. Even if you don't create a formal budget every month, you have some sort of budget or guide that helps you make good decisions with money. Maybe it's only a mental one, but you have a general idea of how much money you may have coming in and how much money you have going out. If there's anything left over, you may decide to put it in a savings. My favorite, go on a trip. I love to travel, do a project around the house, or something else. If there isn't enough money left over, or no money left over at all, you may not have enough to make it through the month, and you may decide that you need to make some decisions about getting a loan, putting it on credit somewhere, or maybe taking some additional work to make more money. Those are decisions you'd make based on the budget that you have in your personal life. It's very similar for businesses. Businesses that create and analyze their budgets have a higher success rate than those who do not. It's important to analyze your financial data often. The more often you review it, the easier it's going to be to see those trends and issues and errors and get those corrected quickly. Keeping up on financial management analysis will make it easier for you to quickly determine if your business is profitable, if business growth is expected and how much, if you are able to get a loan from the bank and afford to pay it back, if you're thinking of adding other product lines or reaching new markets or planning to diversify. You're going to need that financial information, and you'll need to understand what adjustments will be needed as a result of those changes. Cash flow is made up of 3 basic activities. And Savannah set this up really well with that cash flow statement. Operating activities includes production, sales, delivery of your business product, and collected payments from your customers. Cash flow from operating activities shows how much cash your business has generated from its operating activities. Investing activities include any kind of purchase of assets, like the building or land or equipment, and those payments related to mergers or acquisitions, any loans made to suppliers or received from customers. Investing activities demonstrate how much money your business has spent on investments. And then there's financing activities, which include cash coming in from investors like banks or shareholders. It could include the sale of stock, repurchase of company stock, repayment of debt, or payment of dividends. So basically, this shows how much of your cash flow is generated from financing activities based on transactions your business has with its owners and debtors. There are several things that you can do to improve your cash flow. You can work on your accounts receivables by making sure you get your invoices out quickly. You can check with your suppliers and see if you can renegotiate some terms to extend the accounts payable. You can build a cash reserve. You can create cash flow worksheets to determine cash flow targets and forecasts, which we'll look at in just a little bit. So forecasting is a technique that uses that historical data as inputs to make informed estimates that help determine the direction of future trends. So businesses will look at this forecasting and look at how best to allocate budgets or plan for any expenses that are coming up during a specific period of time. It's typically based on the projected demand for goods and services offered. Creating a forecast involves analyzing that historical data and recognizing those future trends. So looking at historical data is a powerful tool for financial planning. There are many people that benefit from forecasting. Stock analysts use it to see how the trends will affect change in the coming quarters. Economists use it to make assumptions regarding situations that they're analyzing. And investors use it to see the increases or decreases, or how the increases and decreases will affect their shares. But the main person or the most important users of forecasting are business owners and managers. They use it to help plan for the upcoming period and to see how they can move forward with their financial resources. Forecasting cash flow accurately and maintaining liquidity are even more critical in an uncertain economy. And the better the forecast, the better your company's profitability. There is a process to forecasting, and it involves gathering that current data. You want to make sure that you have your financials in order and correct before starting the forecasting process. Then you want to think about the future of your business. What trends or future projects may play a part in the forecast. And then you would look at past budgets and forecasts and compare them with actual business results. Consider what deviations took place during that time and why they took place so that you can make those informed decisions going forward. Last, you would evaluate your forecasting process and then refine it and modify it if needed. So if you're noticing that it's going a different direction than you thought, then just kind of refine that and make those corrections and then move forward. The cycle starts over every time you do any forecasting. So let's take a look at some cash flow analysis and forecasting. So here is a very general cash flow worksheet that for an example business. And I just want to go through a few items here. It looks a little different than that statement that Savannah presented, and that's okay. People are going to have different things depending on what their business has, and this is a worksheet, not a statement, so it's a little bit different. So here, what we have is up here, we have our cash beginning balance in January. So this is going to be, if you started at the first of the year, your beginning balance off of your bank statement. So it should match the beginning balance off of your bank statement. So this is the amount of money that you have in the bank. Then you're going to take any income that you have from sales minus any returns and allowances to get that total income from sales. And you may not have this, or it may be that your income comes from services instead. And so this would be different. Or it may be like Savannah was talking about, a construction business that has different areas of income, and they may be listed here as well. Excuse me, you have the total inventory purchased in this case. So we had some purchases and then we had some returns and allowances. And so the total inventory purchased. And here are all of our operating expenses. So we've got advertising, bank charges, very general expenses that a lot of businesses have, that payroll, rent, utilities, those things. Then if we had any new financing received or if we made any payments on those loans, we could mark it here. And then if there were any owner's contributions, putting money into the business or draws against the business, then this would be noted here, or dividends paid out. And then the very ending balance right here, this would tie back to your bank statement as well, hopefully, if everything's right. It would be the ending balance at the end of your January statement or the starting balance for your February. You can see that they're the same number. So if you look at this one here and this one here, it's the same number. And then this last area here, it just shows the change in cash. So basically, we're operating at a deficit in this month. We spent more than we brought in. So we need to make sure that we're taking care of that for the future. And you can see that it's starting to trend upward here. We have a couple of months where it's a little low, but we are pulling in more money than we're spending, which is good. That's what you want. I also wanted to bring your attention to this business. If you look at the income from sales here in October, November, and December, you can see that they are higher than any of the sales throughout the year. So in this case, this is probably a seasonal business, and their season is October, November, December. So they sell more during that holiday period time than throughout the rest of the year. So what can we do with this information? It's great, right? So we can pull this information and we can use it to look at other things, look at year by year, look at that historical data that we talked about, and we can see things and we can start to see some trends. So in this case, year one, great, right? We had income from sales of $170,000 for year one, some inventory purchased, and then our operating expenses. You can see that for year two, it went up. That's what we want, right? Every year we want to go up more and more and more and get some more income coming in. Of course, with that, our expenses went up as well, and so did our inventory purchase, and that's to be expected a lot of the time. And then the last year, it looks like we had something happen in our year, something kind of crazy. And as an owner, you would probably know what was going on, hopefully. But we have dropped quite substantially. And maybe this was a pandemic issue. You never know. But this is why it's important to plan for emergencies. If you have a drop like this, it's going to make it very difficult for you to continue forward unless you've got that emergency fund ready to go and other means of making things happen during that year. Again, we had a drop in our total inventory as well as our expenses, which is to be expected. Another thing that you can do is you can take your sales that you've noted in here and your expenses, and you can do a percentage of sales. And by doing this, you can see very quickly and easily that in October, inventory took up 35% of our income. So we had income of 71,000, and 35% of that went to our inventory purchase. Another one that really sticks out really quickly is payroll. Payroll was a pretty big number as well at almost 45%. And you can see that that happens throughout. And so you can kind of judge by this what is pulling the most money, and then make those decisions to move forward with how can I reduce my payroll, or how can I renegotiate with my suppliers and get my inventory less, or how can I make more income from my sales? So the next thing that you would do is you would start to forecast. And when we forecast, we recommend that you do a high, low, and a mid. This one is maybe a little unrealistic at 25%. That's quite a reach for forecast, but I do want to show it at 25% because it's really easy to see how much that this went up, how quickly. So it's a couple 100,000 different from our original numbers. So if we were to go up by 25%, we could increase really quickly, right? Now, this is a forecast that was done and all of the numbers were increased by 25%. So the income was increased by 25%, the inventory was increased by 25%, and all of the expenses were increased by 25%. Like I said, that's something that happens in most businesses. When you have more income, you have to get that income somehow. So, you know, you're going to have it increase as well. So that is something that does happen. All right. So this one is a 10%. So you can see not quite as high, but maybe a little more realistic in the grand scheme of things. So we went up not quite as far. And of course, this is across the board as well. And we have a 10% increase across the board for all of the income, the inventory, and the operating expenses. So let's say that your company decided, we're going to work on our cash flow this year. And what we're going to do is we're going to try and increase our income by 5% and decrease our expenses by 5%. And how could we do that? We could do it by negotiating with the suppliers and seeing if we can get that inventory price down so that that 5% income could come up there. We could do a markup on our inventory. We could do some upselling, those kinds of things. So maybe that's what's happening in the forecasting for that. And then how could we get those expenses down? We could get those expenses down by maybe going to our landlord and renegotiating our rent, or maybe we don't pay as much on advertising this time around, or maybe that's the one we want to up a little bit. And so we up that and we go down in supplies or something like that. So you look at what you can control and you try to control it. And again, like I said, you could try and get that inventory purchase down as well. So that would work out really well. And let's see what happens. So what happens when we do that? So this is a 5% increase in our income from sales. And in this case, I kept the inventory as an increase as well. But the 5% decrease is where I did the expenses. So the expenses, maybe, like I said, we went to our landlord and said, hey, we just need a little bit of a cut here. We've been with you for so many years, and, you know, sometimes that'll work out for you, sometimes it won't. Or maybe we reevaluated our payroll and went, okay, you know what, we can, you know, cut here or add here to get more sales or whatever it may be. So you would just work on that in order to get this goal of your forecast. And let's take a look at how that looks compared to our original. So here's our original, and you can see that 722,410 was our total income. And with that 5% increase, we've got 758. So we've gone up a little bit, and that's great. 5% is nothing to sneeze at, for sure. And then you've got like I said, I kept this going up as well. So your inventory went up as well, but your expenses went from $499 down to $474. So you've worked really hard on making that cash flow a more positive without sacrificing too much. It's 5%, right? So it's really a good thing to think about. All right, so let's talk about some of the challenges that business owners face. There's a lot, right? Managing a budget, making payroll, paying bills on time, controlling that debt, securing financing, planning for emergencies. These are all things that are challenges for business owners, and there's plenty more. To be successful, owners need to take on or have a lot of skills, and they need to have those leadership skills and those analytical skills and managerial skills, communication skills, financial management skills. That's a lot for one person to take on. But how you lead and analyze your business and manage and communicate and manage the finances within your business all work together to impact your business. And they're all important. They all intersect and overlap. And the business decisions we make often have an impact in more than one area. For example, if the budget isn't managed correctly, it may be difficult to make our payroll. If you aren't controlling debt, it's difficult to plan for those emergencies. If you aren't paying your bills on time, it's difficult to secure that financing. They all affect one another, and most importantly, they affect your bottom line. And if you look at that from a bigger picture than just financial management, if your communication skills are not great, maybe your workforce won't be as great, so you've got to really, really work on all of those skills. According to research done by US Bank, 82% of small business startups fail due to poor cash flow management skills or a poor understanding of cash flow. And 70% fail because they don't recognize or ignore what they don't do well, and they're not seeking help for those things that they do. Even though that's a lot of stuff for a business owner to take on, there are tools and resources out there that can help you. Good news. Let's look at that. Most businesses today use accounting software, and that can make your life a lot easier. It doesn't have to be anything extravagant, but just having that accounting software that compiles the data for your financial reports and statements, it's really needed. And if you don't understand how it's generated or where the information comes from or any of that, then it's going to be more difficult to understand what errors there are and spot those potential issues before they happen. So learning the software, it's a lot. It can take a lot of time, and it can be a lot to take on while you're trying to juggle all those other elements of owning a business. But here again, there's help. We have accountants that we can reach out to, and it's definitely important to secure that accountant. A lot of times they have a bookkeeping service that they offer, or you could get an in-house bookkeeper depending on what your needs are, and stay on track with all that financial tracking. That's a lot to deal with. This is especially important if you're uncertain on how to class each transaction or the accounting software that you're using, you're just not familiar with. So having that bookkeeper that knows what they're doing is really important. Don't forget about all the resources that you have out there that want to help you, like the ACA and these great boot camps that they offer. The SBDC, we're here to help as well. SCORE, Chambers of Commerce, and so many more. Do your research, find a mentor, ask around. I think you'd really be surprised at how many resources are available for businesses. Financial managers and bankers are also willing to help you with your business when you're looking to invest or get a loan. Here are a few tips for you to consider. Monitor and understand your financial statements, create a budget, track your cash flow, review your pricing, set goals, have an emergency fund, and don't forget that accuracy is key. I can't emphasize it enough. Make sure to monitor and understand your financial statements. Keep an eye on that cash flow. Hopefully now you have a good idea of how important your cash flow is to your business and what you can do to improve it. You should also plan to analyze your financial statements regularly. It's extremely important to keep a close eye on the health of your business. And the best way to do that is to just keep an eye on those financial statements. Just like your bank account, you don't want to leave those business financials unattended. Look for ways to decrease those expenses and increase those revenues, as we saw in the example. By just increasing those revenues and decreasing the expenses just a little bit, it makes a tremendous difference in your cash flow. So pay attention to those industry trends and customer behaviors and enhance your future forecasts and decision-making skills. As I stated in the beginning, here is some information on how to get a hold of the SBDC. For that one-on-one counseling. We have a lot of centers throughout the Arizona, as you can see. We're also all over America, but Arizona is what I know, so that's what we go with. And you can also reach out to us, go to azsbdc.net/where-we/r, and you can get this little map will come up. You can click on your county and register with your center and get that assistance. And also, Savannah, do you want to go ahead and tell them about your contact? Oh, you're muted.
Whoops. You can call or email me. And on my website, there's a link to make an appointment. If you just have questions about your bookkeeping, about maybe understanding income and expenses a little bit more, we're just here to help you be successful. So.
And with that, thank you so much. We really appreciate you joining us today, and I'm going to turn it back over to Robert.
All right, thank you, Cindy and Savannah. Great presentation. We have a few questions. So I'm going to jump into the Q&A, and been kind of looking at these. So Alita asked a lot of questions, and Alita, I would recommend you reach out to Cindy or Savannah directly with all those different questions you have. But I'm going to read through some of these. One question we had was, are quarterly taxes or TPT taxes considered a business expense?
So I can go ahead and answer that. The TPT taxes are not a business expense. It's a liability. Like we mentioned previously, you might sell something for $1,000. That's your income. And then if you're charging 9.181% in sales tax, that is money you're collecting, required to be charged by the state. You hold on to that and then you remit it to the state. So that would actually go into a liability account on your balance sheet. And then at the end of the month, usually the following month, you remit that to your government agency.
Excellent. Now here's another question that I hear and I see a lot. So if dollars in my bank account is not income, what is it? Or I misunderstood.
So the balance of your checking account is your asset. However, how you derive to that balance could be a variety of things. You could have put $10,000 of your own money, which would be equity, into your bank account, but then you could have also earned $10,000. So it can be a mix of different items, but if it's something that you're earning from services or products sold, that's income. If you're putting your personal money into your bank account, that is equity.
And just a note there to remind everybody, make sure your bank accounts are separate. Your business bank account is separate from your personal bank account. Very important to keep those separated. Let's see, what other questions do we have that would be good? My business will be at home. I'm paying a mortgage and not rent. Can I put my monthly mortgage as an expense?
So I can answer that one again. So you don't use your whole entire house to run your business. And so you can take a portion of, there's a couple ways to do it. There's just a standard per square foot deduction that your taxpayer can adjust, or you can take a portion of your utilities and mortgage payment and interest and allocate it that way. But if you are doing that, you'd have to designate a specific office in your home to be the deduction.
Excellent, thank you. And then we got time for one more. And so it says, this question is, what should be my record retention process with receipts for purchases I intend to file for taxes? For example, office supplies, food, mileage, etc.
Okay, I'll take this one, and Savannah can help me out if she wants. So record retention, I'm a paper person anyway, so I like to keep everything. It's so important if you ever get audited, you want to make sure you have that information. There is a timeline, and I don't know off the top of my head. If you were to look it up with IRS, they have the timeline listed on their website. I could get that information to you if you wanted to sign up for counseling. But basically you can look it up on irs.gov and go to and just search for receipts, how long to keep receipts, and it should give you a good information on that. Savannah, do you have anything to add?
Yeah, so 3 years is the standard per the IRS. But then they recommend that you keep it for 7 in case you have to claim a loss or something like that. So.
And hopefully all those receipts match up to what you're claiming in your accounting process. Very important, because the different schedules that are required with taxes that basically reflect your expenses and income and so forth. So, awesome. Great presentation. Thank you for answering those few questions. We are right at time, so we appreciate everybody being with us. For those that are from SeedSpot that are joining us, you can go into the chat and you'll find the links to make sure you get credit for this session. If you missed that part at the beginning, we'll stay on for just a little bit so you can find those. But we appreciate everybody being with us this week. We hope to see you next week for next week's boot camp. Until then, everybody have a great week, and we will see you soon. Thank you. I am going to stay a little bit longer. We asked someone to please repost the links in the chat, the registration. So we want to make sure Tristan did that, so it's there for those that need to get that credit.